Whoa, what's going on, guys? It's been a while. How's everybody doing today? Sunday, World Cup final, Spain, Argentina. So we're getting out of here way before the game starts, okay? But we owed you an episode, and this is a very important episode because there's a lot of tax changes that have been going on, and I see those questions flying around. Lots of misinformation and misunderstandings and misinterpretations of a lot of this stuff. And so we have Abdi Salam, and we have David, who is a CPA. So we have an attorney and a CPA coming on to clear up all of this stuff because we need the legal aspect of it because there's different taxes based off of the entity and residency status. And then there's just the straight up tax law and the changes that we're going to talk about, mostly in reference to real estate and foreign or diaspora buyers, and also what applies to locals on taxes, mostly around the real estate industry. And we're going to focus on the changes, especially. And so you can predict and understand what you're getting into if you choose or have chosen to buy or engage with the real estate market or even just general business in Kenya. And so hopefully this episode is going to be helpful. As always, you guys are part of the conversation. Please ask your questions. Of course, I'll be guiding the conversation, but if you have certain questions, don't understand, this is a live show for a reason so that you guys can participate. So please do. For anyone that doesn't know me or the channel, my name is Ryan Fagan. I am a real estate broker in New Jersey, and we also now own and operate Almasi Realty in Kenya. We help people buy and sell property in Kenya, mostly off plan. I've been in real estate for goodness as a licensed agent over 13 years now. Oh, the times have gone by. I've been in multiple industries in the real estate industry, property preservation, mortgage loan officer, real estate analyst, just to name a few. So I have quite a bit of experience, and pretty much my whole professional life has been in the real estate industry. Obviously, the venture into Kenya real estate is new, but the industry in general is basically what I'm all about. And now I've been trying to, bring to you guys the best information that we can find as far as the Kenyan market and engaging with the industry and everything in Kenya. So that's why we have our panel here today. And I'll let these gentlemen introduce themselves. Oh, real quick, we did have an interesting um, thing that popped up recently, and I have been talking about it for a long time, and we're definitely going to ask Abdi about it before we get into the taxes. And that is the Nairobi County came out with the new, there's some building fees and zoning rules, which we have been waiting on since even before January. It's something I've been talking about, something that I've been excited to see. And I found what at least our surface level dive into it has been very encouraging. And I actually see a lot of things that I was hoping they would do, they actually did. Um, but we'll talk to Abdi about it. It's really exciting. Let's see. Can I bring up the article a little bit? Oh, this is the article. Um, I guess we could drop the link to it. Dang, what's going on? Where's the comments at? Say hello. Don't be a ninja watcher. Anyway, yeah, see, Nairobi County unveils new building fees and zoning rules for all landlords. And it does a couple interesting things. They do the development impact fee. So basically, I guess another building permit. So that's supposed to help with the infrastructure, and hopefully that money goes there and actually does that. And it's interesting how they're calculating it by gross floor area, the use class, and I don't know what the local factor means. We'll talk to Abdi about it. There is a couple other interesting things on here. They're gonna make them have like electric car chargers, and they're going to increase the responsibility for some of the, like, I think they're trying to do like a fund or a tax for the infrastructure of the area. A lot of these things are pretty good. So I just wanted to introduce that. Maybe we'll talk about it a little more. Anyway, we have Abdi here and then David, and I'm going to let them introduce themselves. Let me press the right buttons. Hey, I did it right. What's going on, guys?
Hello, Ryan. Good evening.
They want me to turn the volume up. All right, let me know if
How
that's
about
better.
how about now?
Go ahead. I'll play with it. Introduce yourself.
Hi, Ryan. This is Abdi, and good evening to everyone, and good morning to all of you as well. In respect to everywhere you are in the world. My name is Abdi Adin, as you're all aware. I am a partner at Abdi Salam Abdi and Company Advocates, and my specialty is property law and conveyancing law.
Thank you, Abdi. David.
Thank you so much. Good evening, everyone. My name is CP David Derito Mwangi. I believe it's also a good morning for some people. I'm a CPA, I'm a registered CPA. I'm also a tax agent. So I'm currently the managing partner of a firm in Kenya in the name of Hizibert Consulting. I'm also a registered member of Institute of Certified Public Accountants in Kenya. Okay, thank you so much.
So just to make it simple, Dave. So you do people's taxes. Like, can you explain exactly what you do, just so people understand, like in a
Uh,
basic way?
okay. Okay, thank you so much. I basically handle taxes and also basically handle books of accounts. Those are my main areas of practice. I also do for that a lot of trainings on tax and accounting, and also do a bit of audit. But my main area of focus is basically tax and accounting. Yeah,
So if
I basically do tax for all forms of organizations and even for individuals.
okay, so if someone owns property, which most of the people here are interested in generally, and they have a rental property, they
Okay.
can just send you like how would they like what does that look like if they're working with your firm?
Yes, think they get it clear.
What does it look like when someone's working with your firm? Say someone owns a couple Airbnb properties. Like, how do they work with you? What does that look like?
Okay, I've got several clients in this sector. Uh, I have uh, I have clients who are currently doing who own rentals. I have several of them. I think that should be around five. I have also clients in the hotel industry, who also closely related to you guys. Around the three clients in the hotel industry. Of course, I also have clients in those other sectors.
Okay,
Um, bas- Basically, we assist clients of all sizes. So
okay,
our rates depend on the client size, of course, and on the amount of rent that they are collecting, and also even on the scope of the work.
gotcha. Okay, so like, do they have to keep their own records, or like, how would they send you the information so that you can prepare and do their taxes?
Uh, for some clients, do keep their own record. So what they just send us is their own record. Some have property agents. So what they send us is just their record and we do the filing. For some clients, we do keep records for them.
Okay,
But the
all right,
majority send us information. Yeah.
okay. All right, Abdi, I know I ambushed you with this new article, so I know you haven't had the full time to look at the Nairobi County rules updates, but it is been something that I've been looking for a long time, so I wanted to know your general thoughts on whatever you were able to read. Obviously, you need more time to go through it fully, and you know we do have the actual document, so it's like a million pages. So What are you thinking? Are you muted? Oh, you're muted. There you
Okay,
go.
yeah, I'm here. Yeah, so it's a good article that focuses on the development control policy of 2026. There's some salient features about this new policy that the county just unveiled. One of the main things is in respect to what we call a development impact fee, DIF. So this is very critical because this is payable by the developer to the county government, but there are also certain parameters on how this is arrived. Certain aspects that will be considered includes the actual floor plan, the measurement of the floor plan, the purpose, or rather the intended purpose of this project, as well as the location. So that fee or levy that would be payable by the developer will then be directed towards the construction and the management of the infrastructure. Because as you're aware, most projects in Nairobi, once are nicely done, the road infrastructure and the drainage system is left exposed. And now we have problems such as flooding, poor infrastructure, and so this is a new policy that would seek to address that and bring some sanity in the streets of Nairobi.
Do you think that it will be effective?
Sorry?
Do you think it will be effective?
Yes. So what they have done is they have digitized this. So once
Mm.
you are only qualified, you'll only get the building permit after you pay this. So it's attached directly to the building permit. So meaning if you don't pay for this, you will not be qualified to get a building permit and as a building permit. And as a result of that, it also means you can actually not do actual construction.
Is there anything in there about the NEMA? And I've talked to some of the developers, and one of their concerns has been that you could get the NCA and even the NEMA approval, and then a lawsuit can pop up and stop your project. Does I
Yes.
don't know if you've gotten into it that far, but is there anything that's like
So,
streamlining
so
that issue?
yeah, exactly. So it does. So this policy is environmental friendly. So what it does is that it it also brings in the issue to do with the zoning regulations, because that has been one of the main headaches of many people who are actual residents of Nairobi in terms of how these zoning regulations can be enforced. Uh, Critical to this is because we've had instances whereby people get approvals for 15 floors, but in actual sense they end up doing 20 floors now, which is not particularly in tandem with the environmental impact assessment reports which were done at the time when those particular NEMA and the NCA were being granted.
Okay. And I think maybe next week I'd like to dive more into the details about this and kind of get more into it because it's been a concern for me. Like the development's happening so fast and it's a little disorganized, so maybe adding some organization and some rules around it will be good. I was hoping for it. Wondering your thoughts on the execution because anyone can come up with good policy, but if it's not enforced and executed. But we'll have that conversation next week. I want to take advantage of having David. Thank you for your time for being here. And I guess. All right. So this question is. I'm seeing this question fly around all over the place. Do rentals still work for foreigners with a 30% gross tax? I think they're referring to the non-resident landlord tax in the 2026 finance bill. I think it's in there. Could you tackle this for us?
Yes, I can do. Okay, thank you so much. Okay, the tax for non-residents, and of course with regards to non-residents who owns properties in Kenya, has now been confirmed to be 30%. Actually, it used to be 30%, but previously we had a withholding tax model. So what the government has done right now is to actually, apart from having the withholding tax model, is to introduce now a direct model. So that means that an unresident uh, will basically be taxed either through the withholding tax model or the direct model. So if your rent goes through an agent, then you don't need to register for the 30%. Of course, the agent will deduct that 30%. All you need to do at the end of the year is just to declare your whole income, and of course, you already have the withholding tax for the whole year. So with that, you don't need to register; you just need to declare at the end of the year. But now, with regards to if you are collecting your rent directly, you'll be required to actually register for non-resident rent income, which is
So
now 30%.
if you rent through an agent, you're saying the agent withholds the 30% and pays the tax for you, allegedly?
Yes, you have got an agent. The agent is required by the law to withhold 30%. That's what the law provides. But even if the non-resident does not withhold, then it means you have to register for the monthly one.
And so does this override I believe prior it was 7.5% on the gross of the rent?
No, the 7 point.
Oh, you're breaking up. Say again. Go ahead. Oh, we can't hear you. Abdi, can you hear me?
Yes, I can hear you, Ryan.
Oh, okay.
Maybe there's a technical glitch on his end,
Yeah,
but
I
it should
might
be
have
so.
to hop in and hop out or something. It looks like it's glitching out. I don't know if the internet.
I think what he was trying to explain was the issue of the withholding tax, and which is quite different from what the MRI tax is.
Are they both in place?
Well, yes, for non-residents, yes.
7.5% of gross and
But should be
30%.
that. But that 30% is for, I think, corporates.
Oh, is it for a corporate?
David, are you back?
Because when I'm reading
You hear me?
non-resident, yes, there we go.
Just 1 minute. It's a glitch.
Yeah, because when I'm hearing non-resident, I'm thinking you don't have residency. So you're not a citizen or you're not a Kenyan resident. Am I misinterpreting that? That's what I
Yes,
want
that's
to
what a
know.
non-resident means. So long as you don't have any work permit, or non-resident in the sense that you are not in the country for more than 180 days.
So if you have a Kenyan corporation, is that a non-resident?
When you have a Kenyan company, of course the company is registered and it's a Kenyan company. Remember, the company is a Kenyan company. It's not a foreign company.
So then is
So
it taxed as a non-resident or?
No, you will be taxed as a local,
Okay.
like a resident, not non-resident.
So a Kenyan company does not pay this 30% non-resident tax.
It will not, so long as it's rental incomes. So the MRI tax is 7.5 gross, and that's final.
Oh, and it stayed at 7.5. They didn't move it to 10.
They did move it to 10, but then I think they did revert back again to 7.5.
Okay. David,
Some of these
are you
people
back?
who are passing the legislations are also beneficiaries of these taxes. David, can you hear us?
Yes, I can hear you.
Maybe you can.
Oh, okay.
Okay, perfect. Go ahead.
Were you hearing us? Can you contribute to that? I want to confirm.
Or the issue of 7.5 and 10%.
7.5, 10,
there was a
and the
proposal
30.
to increase it to. Okay, the 7.5 and the 7.5 regime applies to resident landlords. Does not apply to non-resident. You can hear me.
Yeah, yeah.
Yeah.
Okay.
There was a proposal to increase it to 10% in the finance bill. That was just passed the other day. Yeah.
And what the result was what?
It was not amended. The rate remains 7.5.
Okay. Oscar from Elite Sanctuaries is here. What's going on, sir? I saw you in your white suit at the Belgravia event. Okay. I let us know if that was clear for you guys listening. What are some other notable changes that people may be interested in as far as the new tax for 2026?
I think some of those are notable changes. Of course, it relates to the changes in the Tax Procedure Act. And in the Tax Procedure Act, the law was amended, of course, to give power to the Kenya Revenue Authority to deduct, to actually correct, levies. In the past, KRA could not correct levies directly from the taxpayers. Right now, they can correct levies directly. Now, that directly impacts some levies that people are not taking seriously, like the housing levy, of which affects all income.
Right. So, what does that mean? They can go in your account?
No, it means they can come for you. They can actually assess you.
Oh,
You see,
like
in
the
the past,
IRS.
there was no mechanism of there was no mechanism of enforcing. They had just been made
Oh,
correctors, but they were not enforced.
so now they can come arrest you if you don't pay.
Yes, they can actually assess you for that.
Interesting, interesting. Okay, and I think there's been a lot of adjustments on the VAT tax, especially with developers. I think they were changing the way that, if they bring in building materials, there were exemptions, and they took away exemptions, but then they changed the tax. Does that make any sense? What I'm talking about? I don't know all the details, but
Nothing much in terms of changes in the VAT that probably would affect the people in the sector. Nothing much, I would say.
I remember seeing some articles, people thinking that there was a cell phone tax or something, or there was some kind of adjustment there with
Adjustment
importing
on
phones or something.
the country collect.
Yeah, I'm not sure. Okay. What other taxes should people be aware of if they're renting out property?
Of course, if they own properties in Kenya, and of course, and I know there could be options. Of course, probably owning properties as an non-resident, also owning property as a resident. Now, assuming that a person is a resident in Kenya, and of course, assuming that he has got employees in Kenya, of course, you should consider, of course, deducting all the payroll statutory. Of course, that is paying, deducting NSSF, deducting SHIF, and of course, even housing levy from the fixed salary. The other issue that you should also consider if you've got if you have invested, once you invest, if you are not if you are doing commercial property, then of course there is the issue of VAT which comes into place. And I think I also wanted to mention this that as far as residents are concerned, if you decide to actually maybe register a company in Kenya, as suggested, if you register a company in Kenya and that company becomes resident, of course, you're gonna enjoy a ROA rate of the 7.5. And once you enjoy the ROA rate, of course, they also comes with other consequences. And you have to consider if your rent is between 288,000 and 15 million, then of course you enjoy the ROA rate of between 288. If your rent is between 288 and 15 million, 288,000. Let me be very clear, and that is in Kenya shilling. You're gonna enjoy the MRI rate is that is the 7.5. However, if your rent is above 15 million in a year, then you go back to corporate tax. So the 7.5% is not for everyone. So it's just for adults who have got rent between 288,000 and 15 million, or simply 24,000 to 1.25 million in a year, in a month.
Okay. Which one is better? So is it better to pay on just the gross, or is it better to pay, I guess you're saying MRI is how you would say, like on the net income? And then
So
I guess my follow-up question. Go ahead.
If you are resident, it's more preferable to pay through the reduced rate of 7.5. It's cheaper. Other than paying it through the corporately. Yes, it's cheaper. Because properties don't really have a lot of expenses.
I see.
So because if you pay through the corporate rate, of course it will be higher. Yes, you'll be allowed to deduct expenses, but your effective rate, even after deducting expenses, cannot get to that 7.5.
But if you have a company, you can still be elected to pay the 7.5 until you hit the number, right? Is it 10 million?
15 million.
15. Okay, that's a lot.
15 million. Currently, it is currently is actually 288,000 and 15 million. So it is 15 million.
Okay. Now, if you do have to do the expense route, that means you have to do ETIMs for all your expenses?
Yeah, you need to do ETIMs for all your expenses, and that is another challenge. For all your expenses except the exempted one.
For
the rest have
those
to
of
be
you
on
guys
ETIM.
who don't know, ETIMs is like, imagine the IRS, but every expense that you want to claim, you have to send them the receipt for it electronically. Every single expense. Gosh. Okay. That's a lot of
Sure.
accounting. Okay.
Okay.
So for property owners, your recommendation to deal with these new tax changes would be how should they structure things?
So for non-residents, there is it much in terms of structuring. But of course, for non-residents, they can consider as advice, they can consider registering companies in Kenya so that they become residents. And then once they become resident, of course, they're gonna enjoy the reduced rate.
Okay. What about Airbnb? There's a lot of talk about the Airbnbs and Airbnb itself withholding the taxes up front. What's going on with the short-term rentals?
Now, with regards to Airbnb, at times people presume Airbnb to be normal rental houses, but they are not normal rental houses. Airbnb, if you look at the law, they are more of hotels. You can put them in the category of hotels, and those are the properties that provide hospitality services. Given the fact that Airbnb, of course, they are short stay, and of course, if you are renting for less than a month in Kenya, then you are considered to be or to be looking for accommodation, not rent, not lease.
Okay. So then what's the taxes in that scenario?
So for Airbnb, the taxation will be like it will be taxed like normal businesses, and of course being subjected to be subjected to corporate tax, of course,
Okay.
and of course you have to charge VAT, and apart from charging VAT, you need to charge catering levy, which is 2%, VAT is 16%. Those are the basic consumption taxes, VAT and the catering levy. Then, of course, you need to declare your income tax at the end of the year. And of course, even as you declare income tax at the end of the year, in Kenya, you're required to pay your tax in installments. So you need to pay your tax in 4 installments. Then at the end of the year, you declare your tax and pay the balance of tax.
Okay. There's no special tax on top of the Airbnb for the hospitality or anything? It's just normal corporate?
Uh, there is no special tax, it's just normal corporate tax.
Oh, I thought there was some kind of additional withholdings specifically for short-term rentals.
No, there is no specific tax for that.
Oh, okay. Abdi, are you still there? Uh,
I think the withholding tax you could be talking about is the withholding tax on that is charged on people who actually collect money on behalf of others. It is supposed to be deducted by people who collect money on behalf of others. But as far as the income itself is concerned, Airbnb income is not subject to withholding tax.
okay. Interesting. Lex says, hi, was the 5% excise duty proposed on imported ceramic bathroom tiles? I think this is what I was getting at. I think there's something going on with
Maybe
like building materials.
I can clarify later. I don't recall it being passed.
Okay. No, that's fine.
But I can
saw some
transfer.
kind of changes that could affect. I think what they were addressing from what I was reading had to do with
I think
taxes on
what
building
happened is that
materials.
in the first, yes,
What's that?
what on building materials.
Yeah, I don't think they were trying to increase the tax, but they were changing on some of the
They were
exemptions.
they were dropped. It was supposed to be introduced, but it was dropped. If I
They
can
dropped
remember
it.
very well. Yeah,
Okay.
yeah. You see, there is a bit of confusion between the Finance Act and the Finance Bill.
I see. Okay. Yeah, because we
There were a
see
bit
the
of some taxes.
proposals,
There were a bit of some taxes. Yes, yes.
and then I didn't see the final. Okay. So the corporate pay the same rate as individual renters? Is that what you mean? I think there's some confusion about
Yes,
that.
yes. What the
An individual pays the same as a corporate? No, an individual is taxed differently.
No. An individual does not pay the same tax as a corporate tax. An individual is subjected to what we call the graduated scale. But the graduated scale actually starts with the first 288,000 be subjected to 10%. The next 100,000 be subject to 25%. Uh, uh, the next the next amount then getting subjected to that 2.5%. Then anything above 9.6 million in a year being subjected to that 5%. So actually, currently, if you are a high income earner, the individual rate are actually higher than the corporate tax rate.
That's
Yeah,
interesting.
the personal tax is actually higher. Yeah, the personal tax is actually higher. But of course, that applies to people who are earning high income. Yeah.
Right. And that's the U.S. system is graduated like that. The more, there's different tiers.
Yes, graduated.
What was I gonna say? The enforcement. How do they know? Like what you're claiming is correct and
How do
everything.
how do they know whether you are actually declaring the correct risk?
Yes.
Of course, they will know. Of course, at the point of registration of every property in Kenya, of course, government is involved. And currently, there is a lot of integration between government departments. So, if you are buying a property in Kenya, of course, you buy it through the RAD ministry. And even as you buy through the RAD ministry, the Kenya Revenue Authority can also collect data from the RAD ministry. So, there is a lot of integration of data. So, currently, it's not easy to actually hide.
Really?
It's not easy to hide as long as you've gone through the right process of registration. It's not easy to hide. And again, of course, they will do audits. At one point, probably they might ask you uh, for bank statement.
Okay. And I remember there was a lot of talk about them being able to access your M-Pesa. Where did that ever land up?
No, they are still not able to access the M-Pesa directly. They cannot access the M-Pesa directly. So that one was more of a rumor.
Oh, okay. A lot of rumors fly around. But I'm seeing all of them. I don't know which ones are true. Okay. What about what about capital gains if you buy a property and then resell it? What does that look like?
No, if you buy a property and resell it, of course, it will attract capital gains tax. And capital gains tax is basically 15% of the profit that you make from that property.
Does that apply to corporate and individuals or non-residents? Is there any differences there?
It applies to everyone.
They're the same?
Yes, the rate remains the same.
Oh, interesting. Do you have any clients that are also residents in other countries? How do they handle thinking about taxes from their country? Like I'm in the US, right? So the US
By
chases
there,
you all over the place.
I've got two guys who are actually non-residents. One is actually based in Dubai. The other one is based in USA.
How does
Yes,
that
based
affect the
there.
taxes? Dubai, I don't think the UAE doesn't tax, but the US does.
Yeah, they don't tax. Yes, yes. And
What do they do?
unfortunately, there is
What's
no
your
double
US guy
taxation
do?
agreement between.
Go ahead.
He has always paid his Kenyan tax in full. I've not followed what he does when he gets back to the USA, the United States.
Okay. I think that's a question that we're gonna need to
Yeah,
answer because I don't know if you bring back money from Kenya to the US, I don't know how that gets dealt with on the taxes because from the US perspective, if you have a Kenyan entity, I don't know how that would report back to your US taxes. Don't quote me on that. We'll have to get a US tax person to figure that part out, but
basically, basically, in most countries, you'll be allowed to actually uh, to actually deduct that as an expense.
yeah. But no,
Yes.
I don't want to pay taxes twice. That's un-American. Just, I'm kidding. All right. The real SC said Kenya is actively developing a golden visa residency by investment. Be careful. There's a lot of rumors flying around. Framework that grants long-term or permanent residency to wealthy foreign investors who make substantial minimum 100,000. Well, there's the Class G residency already that's like that. So, Abdi, have you heard anything about this? Can I become
No,
a re-
I haven't heard of this golden visa program. All I know was that the Class G that we had, which was pegged on $100,000, now is no longer based on investment. Because I remember some time back, what we used to have was a situation whereby you would just need to produce a sales agreement or as a proof of investment that you are acquiring a property above $100,000, and automatically the government then would not require you to show $100,000 on your bank account. But since that sort of regime now is no longer applicable, now you have to clearly demonstrate that you have $100,000 in the account,
liquid? That's tough,
liquid
man.
money. Yes, yes, because they realized that certain people would produce sale agreements which are not entirely correct, just for purpose of surpassing that rule.
Wait a minute then. What if you have the sectional title and it was assessed at, the 12 million or 100,000?
Uh, you see, that is now entirely at their discretion, to be honest. It's a case by case basis. But one thing that is clear right now is they want liquid money in the account. They want financial statement.
But the Class G you really only should do Class G if you need a work permit.
Yes, if you want to do business in Kenya, yes, that's the best
Active.
form of yes. Some people try to divide that through Class D, which is the employment policy. But to your surprise, the employment Class D is a bit more expensive than actual the G. And furthermore, the requirements are quite stringent because you have to demonstrate why your employer needs to get you a D while we have local expertise for that particular position.
Yeah, that makes sense. They're protecting the workforce so that
Yes.
you're not replacing locals with jobs. I get that. Martin, so Airbnb income of a foreign owned Kenyan company, that's where the issue is going to be, is always 30% of profits. You can also write the apartment fully within 5 years to have no profits, so you'll pay no taxes. I think there's two issues here because he's saying foreign owned company
Okay. And
and then not claiming any income. You want to address this?
yeah, if you're not okay, you can hear me.
Yes.
Okay. Martin is asking whether so Airbnb income.
He's saying like Airbnb income to a foreign owned Kenyan company. That's an oxymoron. Either it's a foreign company or it's a Kenyan company.
It remains 30%. Actually, yes, yeah, it doesn't matter. Doesn't matter whether the company is a Kenyan company or is a foreign company. The rate remains 30%.
It's 30% of the net. If you're getting more than 15 million a year.
Not taxes. If you have not paid, if you're not making any profits, you will not be forced to pay tax if you're not making any profit.
So you're paying 30% on the net.
Yeah, on the net, on the profit that you make, you cannot be forced to pay tax on if you're not making profit in it. We don't have minimum tax. There was a proposal to have minimum tax, but it was actually defeated in the court.
I see. Oh. But if you but the net is based off of what ETIMs you submit then. Correct? The ETIMs expense, you have to expense all your items through ETIMs. David. He's missing. Abdi, can you make the distinction? Because he's saying foreign-owned Kenyan company. Can you like kind of talk about?
You can hear me?
Yes. Can you hear me? Sorry, guys. Lots of technical issues today. Trying to get everybody, the information, but we're having some technical. Abdi, you're muted.
Yes, Ryan. Go ahead.
Can you add some clarity to the designation of a company being foreign or Kenyan owned?
So he's asking, so Airbnb income of a foreign-owned Kenyan company is always 30% of all profits. And then he said you can also write off the apartment fully within 5 years to have no profits, so you'll pay no taxes. Yeah, so the second one is right. Second one, after 5 years, to have no profit. So exactly. So if you've not made any profits within the period of that 5 years, then you can definitely not pay any taxes. That's true. In terms of the Airbnb income, so this comes down to the concept of the corporate tax, which stands at 30%. And as I initially indicated, corporate tax, so long as Michael had earlier indicated that the graduated level has superseded the 30% eligibility test, yes, so you'll have to declare 30% of the net of all the profits that you've made. That is less expenses, and after, it's not the gross, but rather the net.
And I think the big difference because that's the U.S. works in a similar way as far as, taxing from the net. The difference is the ETIMs, because with the IRS, unless you're audited, you just voluntarily tell them your expenses. But since the beginning of this year, all expenses must be submitted through ETIMs receipt. No.
Mm-hmm. That's true. For purposes of accountability, and also them to trace and rather track this taxation later on, because some people use their expenses later on to claim some tax amnesty. So for purposes of proper bookkeeping, they've introduced the ATMs. Can't be only ATMs, right? No ATMs invoice. No, no, no. There's no ATMs invoice for buying an apartment. That absolutely none.
But okay, I have a cleaning lady that comes every week, and I pay her as an expense for the Airbnb. I have to send her an ETIMS receipt to be able to claim that as an expense.
Yes, because it qualifies to be an expense.
Woo. So if I have a cleaning lady, I need her KRA number to send her the ETIMS.
Because it's an expense, correct? So you have to go later on and claim. So it has to be on record.
So for you'd have to get all her tax info to be able to send her that.
That's what the new regime requires. Quite stringent. Michael, are you back?
Question on okay. Yes, I'm back.
Yes.
So there was a question on eating.
Yeah, so the question is, when we're calculating profit, that means but the way that's calculated would be what you made minus the ETIMS receipts that you've sent out. You can't just claim
yes, yeah, that is of course. Yeah, what has not been bought through ETIMS cannot be claimed. However, the exemptions. For of course, exemptions will include things like emolument, interest, bank charges, air tickets, things like wear and tear, of course.
All right. What about like kind of informal people, right? Like I have a cleaning lady. I have to get her tax information, or like how does that work?
No, if you have in such a case for an informal person, you need to ask them to give you eatings. It's easier for them to generate eatings. Eatings can even be generated even with the simplest mobile phone.
Oh,
Uh,
okay.
you just need to do *22# and you'll be able to generate an eatings receipt. It's very easy through SMS. It's actually very easy to generate an eatings receipt. So I don't think
Are
there'll be any excuse for anyone not to give you an eatings receipt.
are people doing that?
Yes, some people are doing it. Not hundred
Some
percent.
people.
Some of us have not been able to achieve 100%, but currently, personally, I can say I'm at around 70% now. The only thing that is troubling me is now the Ubers and everything, but and also
Interesting.
public transport. When I use public transport, but since most of the time I use my car, so of course I don't have a problem because I can always get an eating receipt from the police station.
Wait, so when you get fuel, you get a ETIMS receipt?
Yes, I get an eating receipt.
You have to ask for that and give them your KRA every time.
Yes, you have to give out your KRA pin. Yeah,
But so you yourself do that.
I do that. I do that. I've been doing it religiously, and
Oh
actually one of the
man.
things that I've actually tried to do is to actually try and formalize uh, all my everything that I normally buy. Of course, even the some of the things that we had not formalized. For instance, I used to buy airtime, maybe from the local company, Safaricom. So instead of buying it directly, uh, now I do it actually I do it on monthly basis. So they give me an eating invoice at the end of the month. Uh, I've, I've done the same. I've done the same thing for my internet.
That
But
seems very
I know you may not be
inconvenient.
able to achieve. Yes, sure, sure.
Because when if we go out to eat and I ask for an ETIMS receipt, it takes another 10 minutes to get out of there. They're like, "Hold
Yeah,
on.
sure.
Oh, the computer's not working. Hold on." Interesting. So for those of you guys in the audience, the ETIMS it's collecting all the expenses. So you have to specifically ask for the receipt. Then you have to give them the KRA number, and then I hope they write the right thing in there. What if they put an error? Then it doesn't go to your thing if there's a typo. I always get worried about that. Nairobi Barbie said we are definitely not doing that. Cleaning lady would have to send you an ETIMS invoice. Yeah, see, like I don't think my cleaning
Yes,
lady knows how to
if
send me an invoice.
but now the cleaning lady for you, is she more of an employee or a or a,
Oh, then that's a
or an
whole thing.
independent agent?
An independent, if you
If
have
she's an employee,
Airbnb, uh-huh. Go ahead.
because if she's an employee, then you don't need to ask for eatings. You just need to pay to process her salary through the payroll,
But then you
and
now you're paying a
processing
whole
her
bunch of
salary through the
taxes
payroll. Definitely. But if she
instead of
remains as an
independent
independent agent,
contractor.
she can send you an eatings invoice. Yes, yes.
Right. Oh man. There's a lot going on here.
And she can do that even even if she doesn't have a smartphone, she can still do it.
I have trouble doing it. So, but I don't know anything like that. So, I guess all right. Martin says
Okay.
you could
Okay.
write off the apartments without ETIMS, right? There's an exception, like flight tickets. I don't think so, is there?
Okay. Things like eating exempts some of those expenses. What we call internal accounting adjustments. Those ones are still around, like uh, writing off a property. That one will be around. That one will not require an eTIMS invoice.
But for like
And that
monthly, like if
includes
you get
even
the
the accrued expenses we normally do at the end of the year. That one will not require an eTIMS invoice.
oh wait, what? Say this again.
So of course the accrued expense, the provision that you make at the end of the year, like let's say a provision for date for that specific year, or any other provision, that one will not require an eTIMS invoice, or probably if you are making any other form of adjustment. But I know, given the fact that we are dealing with people in the real estate industry, but I remember we also have people in the real estate industry at the point of construction. Probably there are those people who are interested in not just maybe buying properties. There are people interested in developers. And of course, for developers, you only realize your income once you have started selling. That's when you also account for expenses. In such cases, you are allowed to actually do internal accounting adjustments.
Okay. So there is some leeway.
So there is a leeway. There is a leeway for expenses that actually require adjustment, accounting adjustment.
Okay. So if you want to itemize every random person that you trade with ends up with your PIN, how's your security guaranteed? But your PIN's not really that private. Like, what can they do with just your PIN?
PIN is not really a private document. You can see it's more of a public document. It's not a private document.
But what? I guess someone could send me an eTIMS invoice even though I didn't do anything if they have my PIN. I don't have to consent.
I know they can do that, but you've not done anything with them. You can actually disregard that when you're doing your taxes. And in case the inequation is raised, you have proof. You have documentation to prove that I did not trade with this person. You have your bank statements. You have proof. As long as you have evidence, you don't have to worry about it.
So you don't think someone having your KRA PIN is a security privacy issue?
I don't consider it a security issue because a PIN is more of a public. It's not. I wouldn't call it a private document as such.
Okay. Interesting. What are some things that people think but it's not correct? Like, what's a common understanding that actually is wrong with taxes?
I think some of the things, the main issues that I have come across with is where non-residents imagines that they are subject to the reduced rate of income tax, to the 7.5%, of which they are not subject to that. They have their rate is higher, which is actually 30%. That's one of the areas I believe is a common misconception about rent income.
McTreasure, the KRA PIN is kind of like Social Security number, but not really because it only has to do with taxes. Social Security has to do with your whole identity. There's a lot more someone could do with a Social Security number than KRA.
Yeah, the KRA does not deal with Social Security.
Yeah, it's the same because
KRA deals with taxes only.
Yeah, it's just tax. Social Security number is like everything.
KRA deals with taxes only. Yeah.
Yeah.
KRA deals with taxes only. Yeah.
What are some mistakes that people make with their taxes that you wish that they wouldn't do?
I think one of the things that I've always highlighted about taxes, one of the biggest mistakes that people do is to fail to keep proper records. A lot of people ignore the need to keep proper records. So make sure that all your transactions, are properly kept. You've kept proper records of the payments that you have made to people, proper records of monies that you have received. If you have received some form of investment, make sure that that money is recorded as an investment. If the money that you have received is some rent, make sure that all these are properly backed up by documents. If you have invested money in your business, let there be some form of let's say you want to invest money in a company and as shareholders, make sure that there is some form of agreement to show that you actually intend to pump some capital into that business. Rest KRI comes later and claims that the money that they found in your account is actually income. If you have got expenses, make sure all these expenses are well recorded. Now in the age of e-TIMS, make sure that your expenses, unless that expense is actually exempted, make sure your expenses are actually on e-TIMS. Make sure you have all the records of all your expenses. That will save you from a lot of conflicts with KRI. And again, some of the other mistakes that people do is actually to ignore emails from the Kenya Revenue Authority, or maybe to take advice from just anyone. One thing I've realized, there are a lot of rumors with regards to taxes. So you just walk outside and ask for an advice just from someone, and they give you totally wrong advice, and now you end up in problems with the revenue authority. So just make sure that once you have, if there are any form of audits that have been initiated against you, make sure you actually get the correct advice, correct guidance. Once you get the correct guidance, of course, you should be able to know how to deal with such kind of assessments or audits.
Okay. I was seeing some things about taxes on corporations on the retained earnings. What's going on with that?
Oh, you are seeing some taxes on retained earnings?
I didn't know if it was rumors. You see, I'm
okay.
just
Okay.
what I see.
You see what the of course, I know probably you saw something on taxes on retained earnings. Of course, currently you are now required. You are not required to just keep all the money without distributing. So
Right.
the government can presume some of the money that you have not distributed as dividends is actually distributable, and they can actually demand for withholding tax from it.
My concern about that was, how do you save money in a company? Like, say the company needs to save for a project over multiple years, they're punished if they retain the money, or is there a way to solve that? Can you?
And let's probably prove that you actually retaining that money for. There is actual evidence to show that you actually retaining it for a certain project. But if you don't distribute money, of course, the revenue authorities might come for you. And
So
of course,
you're saying you can make the argument. So how does that work? Like, okay, the corporation, we're filing our taxes, we have 1 million in retained earnings. What happens? Like, how do we address that? Say we're saving for a factory, or I don't know, we want to buy a truck.
no.
What do we do?
Okay. If you can actually prove that you actually bought that truck, I know if you want
Well,
to
we
save
didn't
for
buy
a
it. We're
truck, that
saving.
might not stay. Unless probably you have saved, at the end of it all, if you look at the way Kenya Revenue Authority works, they'll probably come for you after 5 years. They will normally do the regular audit. As long as your books are okay and there are no issues, they might come. Might come for you after 5 years. So I
I
would say
understand.
if I probably have invested that money within those 5 years, then I'll be safe.
Oh, okay. So they're not coming after you. And what your tax time is the same, April? They're not coming in May or June
But
to
that one
no.
needs to, but that needs a lot of consideration anyway. You need to sit down and do a bit of structuring and see how it can be done better.
This, this is a good question because uh, when do these changes take effect? But by the time they announce them, they're in effect, right? Like it happens like instantly. They don't even give a ramp up time.
Yeah, sure.
What's up
That's
with
true.
that? Abdi, why do they pass laws and then implement them the next month, like with the car inspection thing? Like, what's up with that?
No,
How are you?
it's how the legal system that we have is set up, because these laws have transitional periods when they should ideally supposed to start kicking in. So the fact that after the president assents to a bill, the law becomes operational after 2 weeks. So sometimes it takes some time before they actually present to him, and the publication is done, and so on and so forth. So the legislative making process takes a bit of time, and then it doesn't immediately kick in. But after a period of time, the law becomes operational now.
Like, I've been following the thing with the NTSA and the vehicle inspections, which I think is a good idea. But how do you just say, okay, in September everyone needs an inspection? It's millions of people, and where's the infrastructure to do it? What? Why doesn't the bill include some like time to implement? I see that
Now,
quite frequently.
what what usually happens is that that's the starting period when the law should ideally take effect and the implementation mechanism starts to kick in. However, they also are very much alive to the fact that if that, the benchmark, or rather the threshold they're looking at, those numbers are not achieved, they are always extended through, circulars and policy papers that comes from the cabinet memos.
Mm,
So nothing is cast on stone,
okay.
but they make the announcement so that they can now enhance compliance.
Because at first I'm like, oh man, they're giving the police more things to get tea from, and but then I saw that they're not doing the enforcement with that. With the police aren't the ones enforcing it or something.
Yeah, I think it also went to court, and it was put on hold.
That happens a lot. What's up with that?
Yeah, because certain legislations do not have public interest at hand in terms of how the implementation phase will be done. And some of
Mm,
these legislations or orders also are not subjected to public participation from the onset.
interesting.
So it's quite common, but at least we're good in terms of we have a strong judiciary that is able to put to a halt any irregularity that may arise.
Is that an issue of them not passing the bill properly, or I don't understand. The,
They
I'm,
do that. They do that. But you see, what happens is that we are an adversarial system of governance. The legal system that we have is adversarial, and the constitution is very robust. So any legislation that touches on the Bill of Rights, insofar as human rights are concerned, or legitimate expectation, whatever you call it, and find its way to the courts, and there are every reasons as to why, unless this particular action or this policy paper or even this circular or law is not put to a halt, rights will be violated, then definitely the constitution kicks in. It doesn't necessarily mean that all legislations passed by the assembly is bad, no, but those contentious ones which affect the day-to-day basis and the rights of the normal civilians is actually what is quite often challenged.
hmm. Yeah, because I was reading it. I think it makes sense. As well. I was just like, what's going on with the implementation? Like how? Because I'm coming back. in September, I'm like, oh, am I going to have to rush to get the car inspected? Where do you even go? So
Don't worry. We're a very flexible society. We always give
uh,
room.
yeah, right. But they see me coming. I'm the first one to get stopped. So I'm like, oh man, let me make sure I do whatever I need to do. Okay. Um.
I'm also thinking now on this on the issue of dividend. Uh, as you are suggesting, there is only I'm thinking of. Of course, that has not been tested, but of course, if you are asking for evidence of how probably you're gonna spend that money, you can maybe show your cash plans. That could, of course, that can help and such, and of course also show probably if you have some form of dividend policy, you can show that. So those
Okay,
are
that
some of the
makes sense.
documentation that can actually support your plans. Yeah. Plus any
So,
other thing that you might come up with. Of course, even business plans. Yeah.
so maybe in your
Yeah.
company constitution you put something about saving money to reinvest or something in your dividend policy.
Yeah, to reinvest in your business and so forth. Because the way you do your articles and so forth. Of course, you can also consider your business plans. You've got if like for instance you're saving for that machine, do you have a business plan for that you have in place that has actually been passed by the board? So just make sure that you have got some form of documentation that actually be passed by some guys, by the top people in the organization. That can also help. If you are doing it as an individual, probably something that you've discussed, probably with your management and so forth. So that can help. I'm of the view that would help to support the reason why your retained earnings should not be subjected to 15% uh, withholding tax. There's also the other issue that I was trying to bring, and maybe as we concentrated so much on residential rent. I'm wondering, do you have some guys who are interested in investing in commercial property?
Yes, please, Daniel. Just give them a brief outline of what to look into taxation is so far as commercial
So
property
if
is
you
concerned.
are the taxation of commercial properties is a bit different from the residential properties. If you own a commercial property, of course, those will be subjected to the normal corporate tax rate. That means they will be taxed at 30% of profit. But I think that directly goes together with Airbnb. I think we mentioned something about the Airbnb. Now, apart from that, it's also good to remember that if you are going commercial, of course, there is the aspect of VAT that needs to be paid. You need to charge VAT on your property. And of course, there is no chance of paying of the reduced rate. The reduced rate is actually for residential properties. It does not apply to commercial properties.
Hi guys. I'm not in Nairobi, but I lost power. See, it happens in other places.
Yeah, these happen. These happen.
Yeah.
These happen. Yeah.
I'm waiting
Yeah.
for it to come back on. Okay. Any questions from the audience? You guys have been quiet today. I know the audio's a little rough. The
Maybe
reason
they are
for all the
waiting.
yeah, the reason for all the court cases is because a lot of these new laws are passed as executive orders rather than through parliamentary. Is that true? I don't know.
No, no, they are done through
Well,
they are done through the parliament. Actually, we rarely have rules passed through executive orders and like in the United States where, where we hear of executive orders. In Kenya, they are done through parliament.
I think what the person was trying to prove, or rather make it clear to us, was that we take instructions from state house as opposed to
Yeah, sure, sure.
parliamentary
In fact,
given
that should be the that is the correct thing. That our MPs take instructions from from State House. Yeah, right. Yeah, right.
I see.
Yeah, yeah. So MPs rarely oppose the executive, and when they're in opposition, the in government, of course, they definitely support the motion by the government.
Sorry, guys, I'm getting set back up. Yeah, come back on. There we go. Oh, turn me off here. All right, sorry about all the issues. Oh, I can't hear me.
Michael, if I may ask, there was a question, thing in respect to matters to do with Airbnb, if you be
Yes,
recall. So we did
Yeah.
used to have a 5% on Airbnb tax, correct? And then we also
The,
we also had the digital
the,
tax. Yeah, we can't hear you.
5% is actually not on.
You're muted.
no, I hear him.
You can hear me.
I can.
Not yet. Not yet. We can't hear you.
I hear you.
You can hear.
Who are we not hearing? Sorry, guys, this is my
Michael,
Is
we
side.
it,
can't hear you. No.
I hear him. I
can
hear
hear me?
David.
He can hear me.
Yes.
Not yet.
Abdi, it's you.
Same as Ryan. Both of you, we
Abdi,
can't hear you.
No, it's you.
we can
It's
hear
you.
each other. I can hear Ryan.
Yeah, Abdi, it's your fault. Go out and come back in.
No, none of you, I think, can be heard.
All right. I'll tell him to come back in. The Airbnb. There's
Think
more
Abdi,
info.
Abdi was talking about Airbnb. Actually, that tax, the 5% withholding tax, is not directly to, I would say, it's not a tax that you would say for A and B only. It's actually the tax that affects all payments that are done through the digital system. So
Really?
if
Everyone's
there is a
supposed to
company that
withhold
is
5.
actually, yes, if there is someone who is actually collecting money on behalf of another person, it's supposed to be that 5%. But that does not affect the Airbnb directly. It
See,
affects
so we
even
have
others.
this guy. We have Rich's method saying the government increased the Airbnb tax. I got caught with that. Went into the 20-something% for foreigners without KRA. That was in January.
You
See,
got
but
what
I think
percent?
you get caught with this stuff because you're not structuring how you should be. So these are rare things to happen, maybe.
Actually, these tax on the 5% on payments that are processed. In fact, if you look at the robot provided, it talks about making or facilitating payment on a digital marketplace. So that is unfortunately most of the Airbnb actually their payments are processed through the digital marketplace. So that's why the 5% comes in for locals and 20% for non-locals.
But see, Airbnb, I have been hearing that they're withholding a lot. I see. I wish I had experience with it because I don't know what people are seeing, but maybe that's because if you tell Airbnb something, they're gonna treat you a certain way. I don't know. Yeah, Rich's method. You should never be a foreign entity. It's not going to work out good for you in general.
Yeah, if you are a foreign entity, of course, it will work against. Actually, the reason why Airbnb are affected by that 5% is because of the fact their payments are processed through digital marketplace.
Yeah,
Because that withholding
he's
tax
saying
started on making or facilitating payment on a digital marketplace.
right. So any digital marketplace
It's actually
has a
5% for 5% for residents and 20% for non-residents.
So it's 5% digital marketplace plus the 18 for VAT.
Of course, if you are running an Airbnb, of course, you deduct that amount. But of course, that does not mean that you not, at the end of it, or you still end up, you still pay your corporate tax.
They're getting a little happy with the taxes.
But the good thing with the holding taxes, you can deduct them if you are on, of course, if you are on the corporate tax, the annual one, of course, you'll be able to deduct the holding tax that has been deducted. But generally, if you are to focus, if you are to look at all those taxes, if you are a non-resident, of course, the taxes are high. So,
I see. Oh, this is a good point
advised by
here.
Abdi, and I think Abdi was advising on
The Airbnb.
yes.
This is a good comment. So he's saying, remember when you register for Airbnb to get paid, you're using your USA info, but your property info and address in Kenya. That's probably why it's getting designated that way. That makes sense, which is a good point. It's not something I would have thought about because Airbnb is automatically going to try to comply with the withholding. So now they're doing, that's why they would do the 30% because you're telling them you're a foreign entity. So I guess you would have to register on Airbnb differently to avoid that, which is a good point. I didn't think about that.
Okay. I think I can see someone is commenting here that on top of that, Airbnb take 10% fee. Of course, those should be in some form of internal taxes, but some form of internal fee, but it's not.
Well, that's a fee, yeah.
Those are not taxes. Those are not taxes. Could be some fees that probably could be corrected by the agent. Yeah, by the agent probably who booked you, who booked
the Airbnb is the agent,
the Airbnb.
That's why they're doing that, right? And if they think you're a foreign entity, they're gonna withhold the 30. So I think when you register, you're gonna want to register as the local entity to maybe it won't trigger that. Abdi, welcome back. Can you hear us?
Yes, very well indeed. I'm very much part and parcel of the proceedings.
Okay. What are your thoughts? Tell us things. I
In
feel
respect
like
to
we've
what?
covered a lot of what I wanted to cover. Anything else you think we missed? Any new things coming up on the legal side? What are common mistakes people are making? What's going on? And because you've been busy.
People make a lot of mistakes in respect to taxation, as Michael had discussed in depth, with respect to how they register for these obligations, because registering for these obligations is easier than to comply to them. So compliance requires a lot more than the point of registration. And we also need to understand that there are different types of taxes which applies to properties. Corporate tax is different from MRI, which is also different from the tax which is imposed on Airbnb and the digital tax platform, and so on and so forth. So the best I would say advice that I would give to someone is to first engage your tax expert, talk to a tax expert to advise you before you register for these obligations.
Okay.
Maybe I can add one issue that you also need to consider that when when you're investing, you're choosing to invest whether you want to invest in commercial or residential. For commercial property, uh, there is the option of you can be able to claim capital allowance. You can claim capital allowances. That means probably you need to ensure that you actually uh, document the building, of course, the construction project properly. And apart from that, apart from enjoying the capital allowances, you also enjoy, you also be able to deduct VAT input for the construction of that project. For that is in case you claim that amount within 3 months, and for all the invoices extending 24 months backward, it's called taxes paid prior registration. So those are some of the things that you can actually consider. Plus, those are the incentives. I'll just uh, mention two incentives. One of VAT, the other one of capital allowance. The other will apply to commercial property. So one of the mistakes that people actually do, because we were talking about mistakes that people actually do, they ignore these incentives. Because probably at the beginning of the project, you did not seek the right advice. So I've come across even local people. Somebody has built a very good hotel, uh, but when you ask him, I know you incurred a lot of VAT at the point of construction. How is that input? We can claim that input within 3 months of registering for VAT, but there is no document. He has got no proper documentation. Two, you spent a lot of money to build this hotel or that property. We can claim capital allowances, but it doesn't have documentation. So, because people make mistakes, people start looking for advice. Uh, in fact, you guys are privileged. Those are a part of the world because most of you people seek advice before you invest. Sometimes our people seek advice when now they are caught by the Kenyan Revenue Authority, when they are now in trouble. So you realize somebody had a lot of tax incentives he would have taken advantage of, but he was not able to take advantage of. I sometimes I feel sad about it. I feel sad
They
about it.
don't
And
want
I've
to do
also
stuff in
dealt
the
with the issue
system.
of
They want to do it
yes, they don't
secretly.
know to do it through the system. They want to do it secretly, then they end up in trouble. And I also handled tax disputes, even at the tax appeal tribunal. Even I concluded a case the other day. Uh, also take others to through alternative dispute resolution. But one thing I've realized that most people will only come to you when they are now in trouble. Two,
When they go
It's
through
the same thing.
years.
taxes.
It's the same thing for even legal.
Yes, that's true. Taxes are actually the tax deadlines are actually legal. Yeah. So if you don't follow the tax, the process of solving tax disputes is a legal process. But people want to take it casually. Uh, Somebody gets a letter from the Kenya Revenue Authority, of course they just ignore it. They get an assessment, they ignore it. Then when now they are in trouble, their banks have been closed. Then when they are coming for you, I'm in trouble. You can you assist us? Yes. When you look at that case, that is a case that you have been able to resolve at the very beginning.
Right.
So people need to take the
So
right advice at the
when
very beginning.
when the KRA reaches out and sends that email that you do not ignore, are they like
Yes.
easy to work with if you have the information?
So if you have the information, it's very easy to work with them when you have the information. But once they realize you don't have information, they'll pin you down. Actually, if
I
you look
see.
at, and that is something even Abdi can confirm, if you look at tax cases in Kenya, you look at tax cases that are released to multinationals. Those tax cases, most of them are won
Yeah.
by the taxpayers. But
And
cases
then
involving locals, with small businesses locally, most of those cases are lost. We handle those
it,
cases on daily basis, and I know.
it's hard to go back many years too. I think you're in trouble because you won't be able to have the records, so you won't be able to make
Yes,
any
yes, sure.
arguments.
Yeah, yeah. That's why you need to keep your records. Records are so important to tax. Other than any other thing that you're gonna discuss about tax planning, make sure that you have proper records. Proper records, and also ensure that you have got proper
It's
advice.
fun. It's funny because the ETIMS is not convenient, but it can help with that because it kind of forces you to record everything. So I
Yeah,
guess
so yeah,
it's like good and bad. From my point of view, Abdi, we forgot something.
Yes, yes.
Abdi's is you could work with him directly now.
Oh, yes, indeed. You can reach me directly. Ryan will provide my details as well as Michael. Ryan will also provide Michael details in respect to any taxation matters that Michael can advise on.
Yeah, do you do consulting? Like, okay, we have people that have bought property and stuff. Uh-oh. And maybe they
They
haven't
will
done
need
their
tax advice.
taxes. Yeah, do you do advice? Like, how do they work with you?
I engage Michael, and Michael does it quite well. So yeah, we have a working relationship with him, and clients who are in need of accounts and taxation, I refer them to Michael.
Okay. Is Michael a nickname? Because it says David.
Yeah, so David Michael Mwangi. Yeah, so you can call him David
Oh, okay.
Mwangi.
I'm like, oh, okay.
Well, I call him Michael,
Oh, okay. I was like,
but his real
cool,
name is
cool.
David Mwangi.
Interesting. Did you guys went to school together or something?
No, we've
You
been
know his
friends for quite
secret.
some time.
You know his secret second name. It's very
yeah.
suspicious. That's two English names.
No, Mwangi is an African name.
Yeah, but David and Michael.
Yeah, so but Mwangi is an African name. So that's how.
Right.
I think since you are in the spirits of promoting African nationalism, let's address him as Mwangi.
This is a Kikuyu name, no?
Yeah.
See, I'm cultured. All those extra lights in your studio to make your head shine. Yeah, the building manager is calling me, so maybe something's going on with the office here. I don't know. Um, Abdi's information is gonna be everywhere. We'll put David Michael's information everywhere in the chat. We'll be dropping some clips. Sorry about all the technical difficulties. David's audio is a little tough. I'll try to get a transcript. Maybe I'll send an email out with the AI summary for you guys. If you're not able to watch, we try to present all the information as easy as possible. Gosh, I skipped a lot of things because the World Cup's coming up. Because we did this really cool thing about how to select property. And the availability sheet and all the headaches with that. But I guess we'll talk about it later. I did make a YouTube community post about it. You guys can check that out. Um, Hopefully, this information was helpful. I know there was a lot of misinformation, rumors, issues. I know it was a little bit hard to digest. I wish the audio was better again, guys. I'm in the back of my head. I'm like, okay, we got to do better with that. We will do better with that. Um, But this is a good start. I always wanted to get a tax professional on to clear stuff up because I'm also confused sometimes and there's so many technicalities. And when we look at comments on YouTube, everyone's saying different things, but it like they'll say one fragment of a piece of information, but it's very dependent on other things like the local entity or a foreign entity. The distinction is very important. Hopefully we cleared some of that up because there was people running around saying, "Oh no, I can't deal with this 30% tax." Um, Again, this is why the legal structure is very important. And yeah, dang, my power went off. David keeps dropping. Abdi was dropping, but we'll do better in the future. But David, thank you so much for your time. I appreciate it. Uh, it's good to introduce you to the people because
Thank
we
you
have
so
many
much.
tax questions, and they ask me, and I could tell
Yeah,
them
sure.
only so much. And I'm like, but we need a good tax person to talk to about these things to make sure that the KRA doesn't arrest them with their new arresting powers when they come to visit Kenya, including myself. So it's good that we have met, and let's keep the conversation going. I'm sure we'll bring you back on. We got to clean up the audio a little bit. But thank you. Do you have any final thoughts, things that you want to say?
Well, my part, if I may go first. Very much. Thank you very much, Ryan, for this platform and for once again inviting me back. This time round, you invited me back in my own platform, rather my under my own farm, which is Abdi Salam Abdi and Company Advocates. Much of your audience, I suppose, know me, having interacted with me in the past, and I'm still very much looking forward to serve them with utmost respect and diligence in my works. And definitely, I'll always show up once and again when invited. It's I would say a pleasure, and I'm very much pleased to be part and parcel of this successful team. And thank you as well to David for the insight. Um, Much of us, to be honest, were not so sure about certain tax implications, but the fact that you've made it very clear, and I suppose most of the audience would also want you again back on this show for further clarifications and points that you would want to ventilate on.
Yeah, especially with any changes
Okay.
and rumors,
Thank
we
you
can
so much.
clear them up.
Uh, Thanks everyone for the opportunity to actually discuss taxes. It's one of the things that I'm actually passionate about, and very grateful that I got this opportunity. And this is one topic that I do uh, with a lot of gusto, I can say. It's one of the things that actually I enjoy doing. And I must appreciate Ryan, and also appreciate Abdi because of that opportunity. Thank you so much, guys, uh, for actually following. I believe we can connect later. Sorry, guys. I think I dropped one or two times. I think as Rihanna suggested, we can do better next time. Uh, I'm not used to doing podcasts. I'm actually used to training online. Actually, I do train a lot of do. I've been doing online training for the last 6 years. I'm not used to doing podcasts, but I think we can do better than this. I will be better prepared to not to do it next time. Thank
Yeah.
you so much, guys, for the opportunity. And of course, you can always reach out to me, and also even through Update, you can also reach out to me even directly. Uh, I operate a firm in Kenya, the name of Hubert Consulting. You can also follow me on my LinkedIn page. I do like a lot on taxes in Kenya. And I've got quite a huge following on LinkedIn and also on Facebook. And I think I'll share my profile with Abdi, and you can share it with Ryan. Uh, Thank you so much. I really appreciate it. And I'm looking forward to having another fruitful engagement with you guys so that we can continue discussing taxes.
Likewise, it would be good to have you back on, and yeah, we'll improve
Thank you so much.
everything. Yeah, cool. Send in with your WhatsApp. I'll get all your info, and then we'll put it in the description. Um,
Yeah, sure, sure.
what was like oh, go Spain. Yes. I can't stand Argentina, so I don't I don't know what's gonna happen. But
Yeah, sure. No, yes, sure. I'm supporting Argentina. I
Oh
don't
no.
know. Abdi, you're supporting Spain.
Okay.
Oh
Poor
yes, all day,
Argentina.
all night.
I like Messi, but other than that, I can't stand Argentina.
Most of Argentina.
All right, so I'm gonna go prepare. I'm pretty committed. Next week we should talk about the building zoning updates in depth. I'm very interested in it, so
Definitely yes.
let's
We can
schedule
we
that
can
in.
focus on that policy now next week,
Okay,
full fledged.
cool.
Yeah.
All right, guys, thanks for your
Okay.
time. I'm gonna go enjoy the rest of the
Somebody is
day.
saying that. Okay, thank you so much.
No, go ahead.
Okay, thank you.
Last words. What you got?
Oh, I think somebody said here, great thanks. Next, tell us more about commercial property opportunities also. Okay, thank you. I
Oh,
think we can actually prepare for that
okay.
next time.
All right,
Okay.
sounds good. All right, guys, see you. Thanks for your time. Peace.
Okay, thank you so much. See you next time.